It's going out there. It's November 10th. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down headlines and tell you what's really moving these markets. So, Daniel, a lot going on in the market, all right? Daniel Creech coming in from, what are you again? What's your title? I forget.
Many, Frank. I'm a cleaning person today in the office as soon as we get our supplies in.
We do, right? The office is small. We're always cleaning it. Yeah, that is true, right? You should hire someone for that. But a lot going on in the markets, right? I mean, fun, people poking fun at Pfizer with the vaccine and the Rivian IPO, Twitter and Musk. I mean, let's start.
Twitter's going to charge now, too. That's a little rabbit trail, but they're doing Twitter Blue, right? It's like $3 a month.
Oh, yeah, really?
They're competing with your favorite company, charging $2 a month. I won't even say their name.
Oh, don't say the name. Don't get me started. Don't get me started. I mean, Twitter's been on fire, right? Just for Elon Musk. I mean, selling his shares, selling 10% of his shares, which, he had people on Twitter. He's such a
Tesla, you mean?
Tesla. Sorry,
yeah.
what did I say?
Twitter.
I get mixed up.
It's all
Twitter,
right.
Dorsey.
They're all the same conglomerates.
But you look at Elon Musk. I thought that was great. I thought it was awesome when, he's just a marketing genius, right? It just, when you're able to get the trolls to go absolutely crazy, it means you're a marketing genius. And that's what he does. But the whole 10% stock sale, and then also, did you see that, who's the organization that called him out on world hunger and said if he sold like a certain percent of his stock, he would be able to solve it? And he said, all right, you outline how I could do that. And he called him out. Of course, they didn't say, but it's kind of funny.
Let's tackle that
right?
first. I want to ask you a serious question on the 10% on the Twitter poll, because I do like, I'm not sure where I fall on it, but I like analyzing the different perspectives and angles. But to the world hunger thing, I have to give credit where credit is due, because it was some World Council or some kind of, global, good old boys club, for lack of a better word. And they gave it a number. It was like 6 billion or 9 billion. It was something specific, and said, hey, this would solve world hunger. And this was from the snake oil salesman type of, hey, if you want to tug at people's emotions, you go after saving children and or saving the climate. That's just a good rule. So that's what they were saying. And to his credit, he called them out and said, hey, you prove to me how this amount will solve world hunger, and I'll sell enough stock and cut you a check right now. That's great. It's hard for me to believe that they've replied, because when you're not searching for stuff like that and it comes across your news feed, you would think that if they sent you a spreadsheet and said, hey, here you go, tough guy, here's how it is, you would have already heard about that. It's smoke and mirrors, but I got to give credit where credit is due on that aspect. On the Twitter poll, I want your serious opinion, because I caught a little bit of fast money yesterday on CNBC, and one of the guys on there was very upset. You could tell that he was just pissed off about this. And I think I tried to write it down. He was calling it it's just not cool, Frank. You know how angry you have to be to go on TV and say, just not cool?
It's holding back a lot, but you got to be really pissed off.
It's like in the movie The Hangover, where they're kicking dirt and stuff, and the guy's like, shoot, dang it, instead of saying F-bombs or anything else. But real quick, I'll give my take after you, but are you offended or are you embarrassed from a market perspective that this guy goes on Twitter? You could argue 10% would be, he's worth $300 billion. So, I mean, it's billions and billions of dollars of stock. It's huge implications. Is it okay to go on Twitter and basically flip a coin to all your followers, Frank?
Absolutely. Why not? What's wrong with it?
I'm not saying there is. I'm asking. You got to give me a little bit more than that, though.
It's supposed to be a public
From a shareholder
platform.
perspective, you're saying, hey, this guy's a CEO. This is going to have huge implications on the stock price.
But that's why people buy the stock. They're selling 50 cars at what's the $1 trillion valuation. That's why they love this guy, because he's like this. That's his personality. The day this goes away is the day they lose their premium.
Yeah, that makes sense.
I mean, you got to love this if you're a shareholder. I mean, this guy calls everybody out. He's out. People don't understand it because they don't have that personality. And the personality is funny because it's not... you could see when you talk to him how just he's brilliant, right? But probably difficult to have a conversation with. But the fact that he goes out of his way to really do some of this stuff, that's why they love him so much. That's the power of a brand, right? They love this guy. They'll back him. I'll be honest with you. Tesla cars are ugly. They're ugly. They're ugly. Have you ever sat in one? They have a screen. They're plain. They look terrible. I mean, have you seen the electric cars coming out? They're not pretty cars. They're not. Yeah. I mean, people say, well, it's a Tesla. It's the brand. It's you saying, I own a Tesla. That's That's why people love this guy. They love the stock and they want to buy it. And, you know, he's delivering and he's light years ahead of everybody else. Everyone in the world, right? Everyone in the world in this industry is now producing an EV car, right? Just announce that you're going to have an EV truck and you get a valuation like Rivian, which we'll get to in a second, which is insane.
Yeah, good segue there, but hold on a second. We got to stay here for a minute.
Okay, stay here. I want to hear your thoughts on it.
So I think you're exactly right in the aspect of this is just a risk that goes along with Tesla. I don't, a part of me wants to say that it's silly because, you know, I think it's kind of ridiculous, but I'm not, it doesn't upset me because if you're a Tesla bull, I believe Tesla stock is off 15% from its recent highs, maybe even closer to 20% now because it's taken a few good pullbacks. So if you're a Tesla bull, nothing is changing. So he sells 10%, big deal. That's a good buying opportunity if you're a bull. I just think that the bigger picture here is know your risk. And this, to your point, this is just part of what you get if you're going to invest in this. This guy is Tesla, and it's hard to argue with the results. And I've totally been dead wrong on this. If I ever had a gun to my head, I would have bet against it or just avoided it. Yeah. So I've missed out on great gains. But yeah, I just think that's a good overall lesson of, hey, this is just one of the risks in there. And if you're not comfortable with it, don't own that stock.
I think it's clear. This is definitely clear, okay? Everyone, 100% of the people that criticize this guy and rip this guy apart are people who don't own the stock.
Or are short it, probably.
Whatever, but they don't own it, right?
Yeah,
so they're going to have everything to say because they've been saying that this stock was overvalued 85% ago. And, you know, if you look at the fundamentals, they're probably right. But to see where this stock goes and what he's accomplished, I mean, this is a guy that's unleashed, has more money than he knows what to do with. And I like that because he's a change the world guy and he's changing the world. Is he? Yeah, you have an opinion about, you know, his personality or what he does, but if you're a shareholder, you love everything this guy does. This guy made fortunes for so many people. Yeah. You could say, well, the stock's off 15. It went from 800 to 1,200 in like a week on no news, okay? So if you bought at 1,100, you deserve to be down 10-15%. But you bought it any other time in this company's history, you're filthy rich. Yeah. And those aren't the guys criticizing him. Those are guys that are backing him. And for me, you know, I love it. Look, that's what got him here, being that crazy and you know, just to see what the trolls do and everybody coming out after him. And these are all people you see on TV and how they don't own Tesla. That's why it's so funny. Of course, you're going to criticize him because you didn't make money. If you made money, you would be like, wow, this guy is doing it right. And now he's got a massive audience. The whole entire world, even my mother, everyone knows who this person is. You can't say that for the greatest sports athlete or the best entrepreneur.
Oh, yes, you can, Frank. Everybody knows Michael Jordan. Get over that.
Yeah. All right, outside of Michael Jordan and Kobe Bryant. Yeah.
Anyway,
but,
yeah.
You know,
no, I get your point. That's a great point.
I mean, so no, I have no problem with it at all. And then, you know, you're going into Rivian now. Holy cow. I mean, what a fun market this is. This is awesome. So this thing's coming out. I mean, I have so much to say about this. It's funny. I mean, I wouldn't be surprised if this thing opens. Like, it's not open yet. The time you're going to listen to this or watch it on our YouTube channel, Curzio Research YouTube channel, it would open. They said their price is $78 a share, and they're like, that's higher than the $65, $68 price, right? Okay, it's higher than that $65, $68 price that you put out 3 days ago. But 2 weeks ago, this company had a $54 billion valuation. Now it's coming out at 78, which is going to give it more like a $70 billion valuation, right? So it's $70 billion valuation. And what are they doing? They're doing something. They're producing something that the whole entire world is producing right now, right? Massive. Everyone's going to produce 3 million EVs. We're going to have 25 million, hundreds of millions of EVs by next year. If you listen to every one of these companies, they don't have the supply chains. They don't have anything. Just to see the valuation of this company is amazing, right? Because they're doing 1 million in sales. Put that in perspective, we're doing 3 to 4x that. Our valuation isn't $70 billion. I wish it was.
You and I both.
It's not. They lost $1.3 billion last quarter. So if you do the math on that, right? They're raising $11 billion. That means they're selling a portion of their company, $11 billion worth, which is the whole company a $70 billion valuation. That's $11 billion in cash. That's why you go public. You're bringing this cash. Then you can tap the equity market. You have access to capital. You get a higher valuation. Yeah, that's why you look at, right? So they have $11 billion. That creates, based on what you're losing, a 24-month runway. With almost no revenue over that time, they think they're going to sell all these cars by 2023, 2024, over 50,000. It comes with 6,000 plus employees that you have to pay. They say they have a backlog of 55,000 vehicles, which are expected to be delivered by 2023. I don't know how that's possible. I mean, if you want to put that in perspective, Tesla's been around for a while now. You see Tesla cars on the road. That's 2.5 times the number of Teslas produced over the past 12 months. But this company's magically going to produce all those cars. For me, when I look at this, it's just a sign of the times. It makes me think like a top is coming when I see a valuation like this on a company that's doing this much in sales. And so many people are going to be making money. When these insiders open up the doors, when that lockup period ends, you're going to see massive, massive sales. This thing could open up at 100 and go to 120. It can go to 300. This is not Tesla. This is a big difference from Tesla. They have a long, long way to go, and the valuation assumes that these guys are going to be the biggest EV maker on the planet. If you believe that and you buy it now, you still probably might not make money, but that valuation is absolutely the valuation. The market caps for Ford and GM, right, are $80 billion. This thing's probably going to come out at the same valuation, a little bit higher than those companies. How old is Ford, Daniel? I don't know, I don't know. Over 100 years old. They've been making tanks for the Army in World War II, right? This is a company, right? So this is all this time, you got a company like this that's, 10, 11, 12 years old that comes out, and already you have companies like Ford and GM looking up to them, which I find interesting.
Yeah, that's so I have to admit, this morning when we were grabbing coffee and BSing in the office for a minute, I thought that you were, I don't know if exaggerating is the right word. I almost thought you were leading me on in a fun way because you were like, hey, you want to talk about Rivian today? And I knew the IPO was coming up, but all I think about when I hear Rivian is, oh yeah, they got some huge order from Amazon at some point. And I remember seeing headlines about that. And when you said they're doing like $1 million in revenue, I thought you were just kind of like, throwing numbers out. Yeah. So I go to CNBC and it says, the third bullet point here is Rivian expects to lose $1.28 billion this quarter. So we're in the fourth quarter now, while generating, and you got to love this wording because words have meanings here, generating no more than $1 million in revenue for the same amount for the same period. And I'm thinking, wow, so to your point yesterday on Wall Street Unplugged, for those of you who haven't listened, listen, because it's a good segment and the conditions right now are as good as they're going to get. Easy money policies, low interest rates. Yeah, you got a lot of fears and this wall of worry with inflation and things, but it's getting very hard to justify stuff like this in a market. I mean, when people ask us what we do, Frank, hell, we're going to have to say like a financial circus or entertainment show because, how do you say, hey, should I buy Rivian? Well, yeah, fundamentals have proven not to matter for quite a while now, and valuations can always be stretched, and you could always do this and that in growth companies. But wow, this is like laughable to say, what's going on here? Now, the Amazon thing is cool, but it's still 2030. They're going to deliver 100,000 cars to Amazon by 2030.
Hey, listen,
it's 2022. Let's round up, people.
They made that announcement. I go to Consumer Electronics Show every year, okay? And if you haven't been there, you have to go at least once. It's unbelievable, right? So last year, they had it virtual, which was horrible. 2019, I was there. We brought, a video guy and filming everything, and it was amazing because people were talking about Rivian there. Ford was there talking EVs. It's 2019, January 2019. And I remember we did an interview with an executive, one of the top guys, a top executive, because Amazon, there's a bunch of different areas. Right now they're having like 4 different hotels. But the main area in the conference hall, they have this huge area. We have the Intels and, Microsofts and the Qualcomms when you walk in, right? All these big Chinese, massive, massive booths, right? Probably millions and millions of dollars. And then you have to go to a separate place and they have all the cars and the vehicles there, right? And they have NVIDIA there with their technology. So NVIDIA would have 2 booths because they have one in that area with Intel showcasing their stuff with their chips. And then they'll have like the auto segment, right? So the auto place has gotten so big that people from the Detroit Auto Show, because it almost runs like at the same time, all the companies started going there because the crowds were much bigger, right? They were getting like 25,000, 100,000 people. So it became a big event, and the car area is huge. So we walk in there, and I see Amazon. I'm like, why is Amazon in the area of cars? So we interviewed them, and they started talking about this, and we have that interview. And it was, Rivian and make an investment in this, and now they're going to have Alexas and all this. But investing in this makes sense for Amazon, right? It makes sense because they're like, okay, we want to have EV vehicles, right? That's going to save us money in the future. We want to lock in something that's good. We did it with a small company, and now we have 1%. That makes sense. Now, let's go with Ford here, because people are saying that they're like high-fiving Ford that they have an investment in this company, which is whatever, 10, 12%. And they're like, that's great. This is a clear competitor to Ford, Daniel. It's a clear competitor, right? So it's like us as a publishing company investing in a competitor and that competitor becoming 3, 4, 5x bigger than us, right? So, but investing it at the very early stages. So you have Ford investing in this company in the very early stages. Why not purchase that? That company's going to have today, it's going to have a higher market cap than Ford. It's going to be bigger than Ford, this company, right? You had the opportunity to buy, they're coming out with electric truck and SUVs. That's what's exciting, right? That's where, believe me, I'm driving SUVs, driving around the world. Gas prices are going through the roof, dying, right? So that's where the market is, right? People love SUVs. They love pickup trucks. These guys are going to compete directly with the F-150, which is coming out. So instead of Ford going in and buying this company and learning about their technology and buying in this company, they decide to say, hey, we're going to invest in this company, right? And now they're getting a high five for that. Instead of, hey, these guys have great technologies. You could poach the engineers, do whatever you want. You're Ford. You could tap the debt markets. But here's the difference, because this company now has this valuation. And you know how much Ford is spending? Because I don't know how much Ford spent to invest in it. Maybe $1 billion, and it's worth like $8 billion now. They're spending $30 billion over the next few years on EV technology because they don't have the capacity. Like, they're only going to be able to sell 10% of the amount of gas trucks. So they sell, whatever, I think it's like 800,000 of the Ford F-150s. Only 10% of them they're going to be able to sell over the next 2-3 years because for EVs, as they turn to EVs, they just don't have the capacity. They don't know where they're going to get the manufacturing from when it comes to batteries and the technology, and that's going to get better and better, and infrastructure. $30 billion. So you got to figure $15 billion that's going to be wasted. You could have took that $15 billion and bought this company, and look where you are. Now you're playing catch up, and yes, you have a stake in the company, but this is you have a stake in a company that's bigger than you. It's 12 years old when you were making tanks in World War II. It's just the innovation behind some of the, and GM2 has a similar market cap. For me, I get fired up about this because Ford talks about how great they are and all this technology and stuff. Here it is. You had this company. You could have bought them. And look at the valuation of this thing is bigger than your company now. And instead, you're like, let's get a stake in this company just in case if it turns out to be bigger than us or this technology is good. And now look what happens. They might wind up buying Ford 2-3 years from now if this valuation keeps going higher.
Yeah, anything's possible, especially in this market.
I don't know.
Easy segue here because I do want to talk about this, another macro item. But Amazon owns 22% of Rivian, and Ford owns about 14%, which is valued about $8 billion. Yes, you're right.
Yep.
You want to make a boring announcement about Amazon and our CRA portfolio?
Before we get to Amazon, I want to talk about one other thing, which is Coinbase.
Oh,
because it's interesting. Coinbase was in our portfolio, and it fell. I think we took what did we take? Like a single-digit loss on it. But yeah, I was worried with the SEC coming after them, and you know the SEC. The way the SEC operates is they usually wait for a division to operate over time, and then you can go after them, and then you can get massive damages, right? Because there's no damages, it makes no sense to come after a company. The SEC, what they did to Coinbase and their lending division, Lend, they said you can't launch this, even though Coinbase and their legal department just did everything that they gave the SEC, everything they want. The SEC just didn't want to see. They didn't want to work with them. They're like, too bad. So the fact the SEC has a thing for Coinbase made me worried. So we sold at a small loss, and it's a little bit higher now. I mean, it was a lot higher, but it's down about 5-6%. It was down like 12% earlier. I'm looking at it now. It's down like 5-6%.
Yeah.
But I'm looking at Coinbase, and this is a company that makes its profits through trading, and maybe that changes. They're going to come. I think they're investing 10% of their net income or their profits into crypto investments now. And they're going to create a whole bunch of products like Galaxy Digital, Voyager. Those are really good names in the space, right? That do lots of stuff, trading, research, analytics. But right now, it's all trading. But if you look at Bitcoin and its market cap compared to the entire industry of crypto, it's about 42-43%. And if you look at the biggest people in the space, at least so they say and they claim, they're hodlers, right? That they hold on for dear lifers, right? They hold on forever. And if you're doing that, you're not trading the security. It's almost like if you have the FANG names and you're not trading the FANG names, which account for 20% of, you can say the market's still going to do good and there's going to be trading in the platforms. But when you take those off and people are just buying Microsoft and Meta now, Facebook, I can't believe Facebook changed its name. Anyway, and the Amazons and stuff like that, and you're holding them forever, it's going to result in not as much growth, right? And you need that fast growth. So I wonder if that's an indicator, because they really missed estimates by a lot. They're the premier company, but we also know that people love free trading. And these guys charge a lot. If you're trading $10,000, $15,000, $20,000 in crypto, they nail you. Few $100 here, few $100, $300, $400, whatever it is. they nail you. And for the bigger accounts, that's, they can go to other platforms. But I wonder if you're looking at Coinbase, is it overvalued? They're going to have to innovate. But the current model where they're generating most of their profits off of trading, and the fact that we probably will go that way in trading, where it will be free, just like it is for stocks on most of these online platforms, it makes me a little skeptical. And I'm not surprised that they missed by a mile, but let's see what they do going forward. Again, it's hard to predict. Crypto's all over the place, but with crypto at all-time highs, these guys should have had a good last month and a half, and it didn't show up in their results, which I don't know if I'd be a buyer here.
I would if you're comfortable long-term with this. I'm going to go out on a little bit of a limb here, and I'll even hand you the saw, Frank. I agree with everything you said on the trading concept, because if the majority of Bitcoin holders are going to hold forever, that's going to be detrimental to your business model. That's why they have a lot of other coins, even the meme coins and things like that, because they just want those fees. They want activity. I don't think it's a far stretch on Coinbase, but you got to be patient, because it has run higher. I think it's near, before the earnings report, I think it was basically near where it opened up.
Not where it IPO, but
on the IPO. It was around 350 it spiked, but it wouldn't. I don't think it's a long stretch to think of Coinbase as evolving into a holding company over time. But I could be dead wrong on that. So you're right. I think that over time, your trading platform revenue is going to go down. I think it's going to be like stocks and be more free, or go towards that race towards zero. But when you have 10% of your net income or operating income, however they're doing that, investing, you're turning into a Galaxy Digital or a Goldman Sachs, to where you could be valued at, hey, we got a lot of swings at bat here. We're going to invest in all these companies. They obviously have a great pulse on the market, and they're the only game in town. One of the only games in town from a standpoint of a lot of institutional money can flow into Coinbase.
Clearing, yeah.
Yes, and it can flow into Coinbase a lot easier than it can Galaxy Digital right now, which is over-the-counter stocks and all that. I think that'll all change. But it's hard for me not to, like, if somebody's like, hey, would you buy Coinbase here? Yeah, I'd probably have exposure to it if you're bullish on crypto and you don't want to play crypto in general. I don't know why you wouldn't, but this is more of an interesting stock to pay attention to. I was going to buy it when it came out, but then I thought we were going to recommend it. I haven't bought it since we sold it. It did kind of spike on us a little bit.
So my question,
but it's a great thing to look at. Yeah.
So my question to you is, why buy Coinbase as a play on crypto when you could buy Bitcoin, and Bitcoin's easily outperforming it?
Because that's a good question. You would want to, you have to buy into that holding company mentality.
Yes,
so, hey, what?
And the innovation.
Yeah, and that's a big, I mean, you're betting on management to make good decisions. I'm not saying that's a layup. I'm simply saying, like, how I would view that is to say, okay, you got this core business model and you're trading and you're doing these, other products, but I need to bet on you taking some of that profit and finding the next whatever and it blowing up. And then all of a sudden you report earnings and you say, hey, oh, by the way, we got $10 billion in this stake that we're going to IPO later on. And so it's more of a holding company like that. And that's a long way away.
And this is my opinion, right? Obviously. But I've had, two of my contacts who are deep in crypto that helped me tremendously get in front of trends that were incredible. And it resulted in amazing performance and still amazing performance in our crypto intelligence newsletter, which we just got a lot of people signed up to, which I'm very happy about. But they were disagreeing with me when I said this, because I posted this on Twitter at Frank Curzio, and they're like, Frank, what all these shit coins, Dogecoin, that's what they traded. But the big money really comes from those institutional trades. But the one thing that scares the hell out of me is the SEC is really, really fallen behind on this, has fallen behind tremendously. They have to come out, right? And they did this for Ripple. These things are securities. They're securities. They trade like securities. They're securities. They meet the definition of securities. Right now, if the SEC comes out and deems these securities, what that means is they're going to have to show their financials, show their cash balances, show the insider holdings. They're going to have to report financials. None of these companies will do that. They'll run to Binance. They'll run to overseas platforms immediately, which a lot of these things are already trading on, and they'll come off Coinbase immediately. But the SEC is going to do that sooner or later. Why they didn't do it yet, I don't know, because that's going to make the security token industry absolutely boom, right? Because that's going to be a great outlet, because these are for the companies that are doing it right. Now you could raise money, come up with ideas, say I'm building a metaverse platform and I'm hiring a guy where, after he builds it, I'm going to fly him to space and then when we get back down, we're going to build an EV and say all the right buzzwords, and my valuation would be tremendously high. Put this on a platform, create this. You need a utility token in order to come to space with me and to go into my EV that I'm going to build 15 years from now. And then I could sell that whole entire thing, make a fortune, and I don't have to report anything right now. That's this industry. That's the shitcoin industry. And it's very, very dangerous. It's great technologies, but the coin itself is not attached to the company a lot of times. You have to have a utility feature. And if that you don't have a utility feature, you're not using the coin. So these guys are going to keep producing coins, right? So it's dilution. And they're selling into the market. They're making a fortune. You have no idea who's selling when, 10% of reporters have to report with the SEC. That's one of the things that scares me right now. And the SEC, just based on what they did with Lend, with the Lend division, they don't like Coinbase. It's clear. They don't like them. It's going to be interesting to see how this plays out. But the SEC, the more further they fall behind, the more crypto gets integrated into the world. Everybody's is being part of this now. And it will be interesting to see how they do this. And then Coinbase is, again, they took out the proper licenses to go to security tokens. They're going to do that. If they see the future, they should do that. But the SEC has a lot of control here with a lot of these garbage coins. And if they deem securities, which they are securities by definition, watch out. Because you're going to see a massive exodus of these names. Everyone's going to have to be forced to sell them and buy them on other platforms. But Coinbase could be in a lot of trouble if that happens, and that's why they really need to innovate and find other ways to make money off their crypto. I don't know. That's just my 2 cents. But
well, the SEC can be bought off, and the time to buy this stock on that would be as soon as they announce the fee that they have to pay, then you could buy them because they hate uncertainty. So, just like Ripple and everybody else.
Thanks for saying that with my company and the SEC. They can be bought off. We're gonna get a knock on our door.
It's funny. Did I say bought off? I meant contributed
I know
campaigns
what you mean. With fees and everybody else paying these fees and stuff. But
guys.
I mean, you pay your fees, you get slapped on the wrist. Again, they have slush funds for this stuff. Most of the financial companies where and that it's done, no fault. It's a big game and everything. So anyway,
fantastic.
Want to get into 2 more things here. I don't know if you want to talk about the Pfizer thing, which I thought we were playing around with that, which is funny with the vaccine stuff where Pfizer CEO's coming out and
I don't know if you have a picture of it with the meme. That was just so funny. I just when I saw it, I thought it was fake, and then I thought, man, maybe this is real. It just cracked me up that their corporate account put a Twitter post on basically trying to insult people that are not even anti-vax, but I don't know. It just came across very weird from a huge giant pharmaceutical company doing that, and then how they had to basically, and I should know more about this when it comes to Twitter, but you can turn off the ability to comment on it, Frank.
Mm-hmm.
So you can shut that. So why would you do that if you weren't getting made fun of and poked fun of? So they social media took the Twitter or the meme and ran with it, or the post and ran with it, and it's just hilarious PR. So.
I
you have to have a picture of it, though. I'm not.
I did.
I'm doing
I put it up.
Okay,
I
was going to say I'm doing a terrible job.
No, it's funny. It is funny.
If you're not seeing it, actually.
I just like the fact that I don't know how to pronounce his last name, Albert Bour or whatever. That the Pfizer CEO came out and basically said that people who spread misinformation of COVID vaccines are criminals.
Criminals,
right?
yeah,
are criminals. Says the guy with the company that got how many fined by the FDA and tried to buy off the FDA. I mean, how many fines? Just go look at it. Just Google. Says the guy.
Now, this is how
billions
gossip starts.
in fines that these guys paid to actually pay off the FDA.
I'm going to be guilty here, but this is how gossip starts. But are they hold the record for the largest fine for pharmaceuticals? Is that right?
Yeah, I think
I think that
$2 billion, whatever.
Because somebody put a great question out that says, "Remind me who has paid the largest pharmaceutical fine in the industry?" And I believe it was Pfizer. That was
and it was Pfizer. It was great. So yeah, but everybody else is criminal. If you point, and again, you're reporting misinformation if you say that. Look what Aaron Rodgers. Look what happened to Aaron Rodgers. I mean. Cast out of society because he's not taking the vaccine. By the way, he got the vaccine from someone that's vaccinated. Everyone in the NFL is vaccinated.
Got the vax. Oh,
I mean, he got the COVID from someone who was vaccinated, gotcha. Right? So, when I look at what has taken place and how they are going after this guy, and he says he's allergic to something with an mRNA vaccine, and he didn't want to take it, and he wants to have kids, and he's not sure, and I don't blame him because there isn't enough data, there isn't enough long-term data on this. I'm just a believer, and he says I'm not anti-vax or whatever. I'm a believer that, I was forced to get it. If I want to go to Consumer Electronics Show and travel, I'm going to Baltimore next week. In these areas, I have to have the card. But still, why haven't we come out with a study in the U.S. showing how long we have these antibodies for the people who have COVID. And how many people had got Delta that had COVID? Because I don't know too many people that got COVID twice. And if you know people that have COVID, it's very few. And it's probably because they got a false reading. So seeing people get COVID twice, it's not often. It's people who are vaccinated who never got COVID. Those are the people that are getting a Delta. And even the people who are non-vaccinated. So why don't we have this data? Why can't we publish it? I mean, we all want to know the facts, right? And just come out. We know that the vaccine is safe. It is safe. But if you don't have to take it like kids, why would any kid under 11 years old, under 15 years old, need to take this at all? Not to mention, if you go back to Aaron Rodgers, could you name a professional athlete? Could you name one professional athlete that's died of COVID, that's playing, that's in any sport? I mean, you would think they're dying like crazy, right, for them to go after him. There's nobody. You see athletes who are 75 years old, and you have Colin Powell. Colin Powell had, pancreatic cancer. He had, he was on his way out, right? But he got COVID. He died of COVID. So, I mean, when you have that, the misinformation that's being spread, I hear you. But, again, nobody cares about facts. Nobody cares about that stuff. If you get vaccinated, get vaccinated. If you don't, you don't. But to go after this guy the way that the left is going after him and the mob is going after him is absolutely crazy.
I don't think it's so much about the vaccine comments. I think it's more about his hair and his style this year in football. Hell, I saw a picture of Aaron Rodgers. I don't pay very close attention to the NFL, and I was like, he's got a new look going on, man. He's got long-ass hair and man bun and all kinds of stuff.
I'm not the biggest fan of him.
Dude's awesome, though.
I mean,
as a quarterback.
Unbelievable quarterback. I think his personality, I'm not really a big fan of him. But, I support him on this where, man, you're going after this guy, whatever. But there's one last thing I want to talk about, which is Amazon. Amazon's stock got hit after earnings, and they missed earnings by a lot. And right away, traders, Wall Street are quick to sell the stock. But one of the things that I could teach you right now, and this is a great lesson, is you have to look at why a company missed. If they missed because they're seeing less demand, that's not good. Okay, but if they miss because they're spending more money to invest in something that's going to create a ton of value in the future, it's an amazing buying opportunity. Amazon missed because they spent a ton of money on what? The most valuable asset you could possibly spend in this market, and that's people. To pay people, to make sure they're fully staffed, to pay them more money, and going into the holiday season. Amazon did not miss a beat during COVID. One of the few companies, and demand, I would say, quadrupled for them. Everyone, you could go down any block and you see Amazon packages everywhere, right? During COVID, the first 5-6 months. This is a great investment. And what we did, we recommended Amazon a long, long time ago, right? 2017. And it was up, I think it's up like whatever, 225%, whatever it is, Daniel, right? So, and this is for Curzio Research Advisory. And the stock hasn't moved much in a year while the rest of the FANG names are up. And now this pullback, I actually issued a buy rating, so you should buy it now, even though we're up. And we were talking about that, and we want to go over that lesson there, Daniel. I'll let you take it from here because I just wanted to set that up. But we talked about this, and you thought it'd be a good idea to explain on the podcast. That's why I'm going a couple minutes late here. Go ahead.
Yeah, it's a macro picture, and I'll be honest, it's difficult. I find this difficult as an investor and a stock picker and analyst because when you feel, there is emotions in investing. And so when you're right about something, when you recommend something or you buy something and your thesis is playing out and the price is going up, that feels good. Don't get me wrong. It's great. But it can be mentally tough to continue buying that and not feel like, hey, now I got to go look elsewhere. Or, hey, I got a big winner. Now if I buy more, increasing my cost basis, my gain's going down a little bit here. And you kind of just reopen that box of emotions. However, you have to continue to stay focused on your thesis. And to your point, yeah, the stock pulled back. It hasn't done anything in a year. But looking at the price to earnings ratio, yeah, it trades at a high valuation, probably 80 times earnings. But it's growing like crazy. It's one of the best brands, and you got to focus on the business. So look, it's in cloud. It's going to continue to dominate cloud, which is a high margin business. Its operating income is, Frank, I don't even know a goofy analogy to try to even be funny about this, but who else can guide for $2 billion in losses or $10 billion in gains in a given quarter? Yeah. I mean, you talk about just the opportunity and the many ways to win. So, and over time, if you look at the greatest companies, they continue to move higher because they continue to operate and produce results. Amazon is just one of those stapled companies that, hey, yeah, it looks great that we got a big winner in the portfolio. And now if you buy it today, that didn't help you if you're buying it today or if you're a new subscriber. But it's a bigger lesson on, hey, when you have great companies and your thesis is intact, you want to continue buying these over time. And one more, and I'll get off my soapbox here. unless you're retired and drawing income out to live off of, you need to have the mindset of saving every single month and investing. You don't have to buy the same stuff every single month, but continue to have that mindset of, hey, I got to save. You want to continue to invest over the long term. You just don't put some money into one thing and then let it forget. It's okay to continue buying as long as your thesis is intact. And I think this is a great segue or a great easy opportunity to point that out.
Yeah, no, and
nobody will listen because it's boring and it's Amazon. It's not exciting.
But that's the thing. You have to be careful here because most young investors I see are not interested in making money. They're not. They're really not interested in making money. I mean, for the last 10, if you take the last 10 years of people asking me, Frank, you follow stock market. What stock you like? What stock you like? What stock you like? And a lot of times I told them Amazon. And they're like, Amazon, I could buy that by myself. And they didn't buy it. They're more interested in the game. They're more interested in that gambling aspect. They're more interested in, and a lot of times they'll hit and they'll buy options and they'll hit and then they wind up losing their money because it's gambling. It's just like a gambler where if you bet in the 1 o'clock games and you say, I really love this game. This is a great game. And you win. You're going to bet the 4 o'clock game because you're a gambler. You're going to, even though you didn't even look at the 4 o'clock games, you're like, wow, hey, I'm up. And it's the mentality there that buying Amazon, and we're talking about Amazon on split adjusted basis is probably, where is it? 3,300 today, probably around 400, 300, 400. Again, people thought that was too high. So you have a 10x winner easily. They don't want that. They don't want to buy and hold. They want to trade. They want to be in the game. They want to be in these meme stocks and going up and down and buying options, stuff like that. You have to get your ass kicked to get out of that, unfortunately, because otherwise, when you're making money and you bought like Bitcoin, you think you're. But that's the biggest lesson here is, buy stocks that make sense. Even if they're big, it doesn't matter what their price. The percentage is going to be the same whether you put $1,000 into a stock that's 3 cents or $1,000 stock at 3,000. Right, a 10% gain is a 10% gain, right, on your money. But just most people love the penny aspect and say, "Wow, this stock can go from $1 to $7 and I can make a fortune." But to get them out of the mentality is very, very difficult, and you usually have to go through losses. And the other thing that you said with Amazon is, being able to buy it now, and you might look at it and say, "Wow, we're up like 225%." That's the past. I mean, the stock could go up 1,000% in 2 years and be cheaper than it was when you first bought it if their earnings are surging higher than that. And it's something you have to realize because it's hard, like mentally thinking, wow, I missed this. That's one of the biggest mistakes I made. I missed the stock. I missed the stock. I missed the stock. And it goes higher and higher and higher. You might have bought Ford and said, I missed it at 12. I missed it at 16. It came out with good results. And now it's 2021. You want to be able to buy these names. And that's a great segue into this, Daniel. And I'm glad you brought that up because we're launching a new product. And it's Big Money Trader. And it's by Luke Downey. And that's what this newsletter focuses on because that's something I think we're missing here at Curzio Research, where his Big Money Trader follows a big money. He's doing great. That's a low price newsletter. Now it's drawing option strategies on top of this, buying a lot of these growth names, but you're going to see names show up in that portfolio, names that you wouldn't think of buying. And some of them are good, and some of them you have to worry about, right? I wouldn't be telling you to buy Rivian here, even though it's probably going to go higher after it opens. But this is a product, and anyone that has bought his front end product, his low price product, Big Money Report, is probably going to subscribe to this because the performance is great. And you're seeing names that, and I covered this in his interview last week, you're seeing names in there that you probably wouldn't buy because you think you missed it. And that's how the big money is made for so many investors. And it's one of the hardest things to do. Buy stocks as they're going higher, or buy these stocks that are in big growth trends, or buying stocks that are expensive. They're expensive for a reason. They're expensive because they have massive, massive growth potential. That's why Rivian's coming at this valuation. They think they're going to sell 2 million cars by 2030. Maybe they do. If they don't, it's wildly overvalued, but maybe they do. I thought Moderna was overvalued at 30, and then, I don't know, everyone in the world has to get the shot, and that stock went to 400 and pulled back now. But it's something to think about, and Big Money Trader, we're coming out with that probably next week. I'm very, very excited about that product. Curzio One members already have that product, so we offer beta versions. I think there's 2 or 3 of them. We get feedback from them before we launch the product. But we're very excited to launch this product. I think a lot of people are going to be interested in it because it's something that I don't see a lot of newsletters cover. You're going to see lots of names show up in that portfolio, names that you normally wouldn't buy because you think you missed. And when you see the performance and what Luke has been doing for his 15-plus year career, I'm very excited to launch that thing. But that goes into the whole Amazon argument, Daniel, as well. So, I'm glad you brought that up. I'm not saying it to pitch the product, but I know that's something, even based on the emails and doing this a long time, where people miss those moves. And they believe they miss them, and you didn't buy Amazon at 1,000. You didn't buy Amazon at 2,000. It's 30. So you think you miss it, you miss it, you miss it. Not only can you be buying these things on the way up, but you're getting into the biggest growth trends. And he has a system where he's not just following the big money, investing alongside the big money. I think it's going to do very, very well. But thanks for bringing up Amazon, because it's something, it's an investment lesson I think everybody can learn.
Yeah, and like I said, I mean, it's fun for me to kind of grow up and be honest or share on the podcast. But yeah, I mean, those are things that you deal with, and that's just part of it. So investing's difficult, but just keep it simple, and sometimes stupid simple to my level, Frank.
No, I hear you, man. So listen, thanks so much for coming on, Dan. I appreciate it. That's it for me. We covered a lot. I'll be back tomorrow with a great interview. It's definitely tuned, but I say this all the time, really mean it, guys. Appreciate all of the support, everything you guys are doing. The brand is growing. It's getting bigger. It's a lot of fun right now. It's cool. And I'm just looking forward for the next chapter in Curzio Research, which is cool, which also includes our token trading on the T0 platform, where anyone could invest in our company and have an equity stake in our company, just like a stock. That's going to be within the first couple of weeks of December. We're really looking forward to that and getting that done. So, guys, thank you so much. Couldn't have been there without your support. And I'll see you tomorrow. Take care.